Why does this keep crashing? Hold on. All right. God, Pine Script sucks. So we fell right about to the expected downside move, but not what the MM was pricing in. So puts were cheap this morning, and ended the day up quite a bit. I did expect us to pull back today, but not to continue pulling back after we hit the support at 30. But we did. We lost that level of support and continued to fall, falling into the slightly longer dated short put position between 58.30 and 5800. Now, some of those squeezed out. We got a little bit of a spike in vol. I'm sure some are going to remain in place. We'll have to see if they start selling more vol into that tomorrow or not. If they don't, we are going to lose the 5800 level, and fall further, probably back towards 57.75, 57.65. The overnight session might be a good indicator of that. Futures caught a little bit of support at the 58.49.75 test, so like around 58.50, which was the pullback, like longer term pullback target for a breakdown above trend. A loss of this support probably means I don't think either the 58.20 or the 57.86 support are that important to the downside here. So it could mean a retest of like 57.33.50, which is, what is that? That's like SPX. That would be back to like 56.85, 56.90, which would be a big failure. Retest to the bottom of the trend. I mean, that's a hefty move down. That would be like 260, almost 300 basis points from spot. Youch. Dangerous failure here for bulls, because we built up some supportive gamma over the last couple of days, and that's one of the reasons like we were able to drive up so high, right? Because there was actually support on the downside moves. But I think today's failure puts us like right at the cusp of losing that supportive positioning. And if we lose that, there's nothing like to the downside. Bulls have been taking profits pretty regularly all the way up on this run. So yeah, it might not turn out so well. Commodities down today. Big hit to China industrial metals. No change in their 1 year lending facility last night, which people expected them to do. And so that's a problem, right? Because already the narrative that they put forward about propping up their economy is failing, as they don't provide fiscal stimulus into their deflationary market, right? And so without stimulus, the deflationary spiral is going to continue. Also, some of the other data out of China wasn't particularly good either. We have some more later this week. I believe the PBOC, or wait, no, the PBOC 1 year announcement was moved to tonight. We have GDP, industrial production, retail sales out of China Thursday night. Also unemployment, which is going to be a big deal. If it looks like they are not on track in any way to hit 5% GDP for end of 2024, anything that came alongside the rally in Chinese equities is going to get hammered. So some of the gains in industrial metals, some of the gains in oil. That's something to watch out for. Although there's still a lot of pressure on oil from like geopolitical stuff with Iran. Mostly industrial metals, but also like shipping, manufacturing. I know their balance of trade came in pretty weak, which kind of hammered them yesterday a little bit. But watch out for that, because the yuan gained a lot of ground on the dollar with all the economic announcements that China made. If that slips, the dollar is going to move up pretty hard, and that kind of reopens the yuan carry that was collapsing, and probably provides some leverage. Not as much as the yen carry, but it does have some effect. So something to look out for Thursday with that data. But right now, I mean, dollar up quite a bit against the yuan at 7.13. I think the low is like 706 recently, so it's moving up quite a bit. And that is pushing the dollar higher, even though rates at the top end of the curve pulled back really hard today. Neither auction was particularly good. And we're seeing those kind of pull back a little. They'll probably find higher support. But dollars continuing up regardless. Correlation on the 1 and 3 month kind of moved back together and is starting to break down a bit. I know Apple tested GM today. I think Nvidia was just about to test GM. So a lot of the tech stocks were kind of not going to move much higher. And we're seeing some of the long vol there pull back as we see, long index vol move up, both on the 3 and 1 month window. This also meant, a fall off in the carry trade. Leverage dropped back below yesterday's high of about 7.6 to about 7.4. And the forward yield of volatility picked up a little bit today, but into close a little lower. Still above the Fed fund and the overnight rate at 6.79%. Move, probably going to spike up a little bit more with the drop in yields today. Skew falling. That's sometimes a kind of a bearish signal. And actually didn't regain a lot of ground from the all-time high on the 20th. If that continues to break down, that may mean a bearish continuation from where we're at. 70.31% of the S&P above its 20-day moving average, and we are starting to see correlation between VIX, cash VIX drop again. And that falling correlation usually means rising VIX, right? So we'll see if that continues to keep on trend. If it does, we could see VIX back to 20, maybe higher. Fed fund futures still about the same as last night. No real changes there. But the spread between the 2 and the 10-year dropped significantly. So uninversion, quite a lot of uninversion today. Looks like mostly after this morning's data too, like right after market open. And that might also be like the announcement that the Fed funds rate, another Fed president saying the neutral long-term rate at 3%. So that's kind of interesting. On the technical side of things, a failure of the top of this trend, which looks better on the daily, I think. Yeah, significantly better on the daily. So we broke out and failed. So kind of like a fake out, breakout. Those are not usually good. If this fails to regain the breakout tomorrow and continues to fall into the bottom of the trend, we kind of go back to what we were looking at before with that diamond top, right? And if that drops down, I did mention the other day or yesterday, I think it was, that sometimes these have like false breakouts, and it's something to keep an eye on. So yeah, watch that. A loss of the EMA 30 would be a strong bear signal. Loss of the 50 MA even stronger. Although really not the 50 MA, more like 55.70, which is just below it. Anyway, that's it. Thank you guys so much for tuning in. I will see you tomorrow, hopefully on time. I don't think I have anything to do tomorrow morning, and I'm out of oil, so finally. No problem. Later, guys.